Alright guys, welcome back. Let's do a quick update. First of all, I hope everyone's having a great Independence Day. Celebrate your freedoms. What's left of it. And I hope you guys have a great time with your family, grilling out, blowing shit up. And hopefully everyone celebrates. Because they've canceled some fireworks, but so what? Just go buy your own and make your own show. It's more fun anyways. It just costs some money. But I was watching the speech last night, Orange Man's, and it's pretty good. You know what I've noticed? Every speech that's a big one that he knows a lot of people are gonna watch, he'll actually speak a little more truths. Like this time, what I've noticed that I've never heard him say was the educational system, how it's not properly teaching the younger generations about history and pretty much everything else, right? And that's why we're in the situation we're in today. It's pretty much infiltration, and you guys know. I mean, if you're in the free chat groups, I post stuff like, you guys know what's going on. If you're not, then you don't know. You probably don't know as much. But let's just do a quick update. Let's talk about the news, and we'll look at some charts. Honestly, I think Monday and Tuesday I will have a better feel for what's going to happen, because I did go short 2 weeks ago. I started shorting, and the market did drop, but then it just shot right back up on employment data, which was it wasn't good. It was something like 4 million jobs were made. They weren't made, it was just people being rehired. The unemployment's still like over 40 million, I believe, or somewhere around there. It's beyond Great Depression levels, let's just put it that way. All right, but you know, the market will look for any excuse to rally higher. The futures, well, they're not open right now. Right now it's the 4th, it's Saturday. But they ended lower. They ended in the red. Nothing significant, but you know, the Dow did end negative 136. So we'll see Monday and Tuesday. Let's talk about the news. I'll look at a few charts, and then Monday I'll make a more time sensitive video. So there was a chart here I want to show you guys. So the red line is loan delinquency rate, all loans and leases. That's the red line. The blue line is the unemployment rate. So the red line lags the blue line, but it will catch up to it. Okay, so, and you see the gray area in the background, those are recessions, and obviously there's high correlation between loan delinquencies and unemployment with recessions. Well, look at the unemployment, it shot straight up. So what do you think is going to happen with loan delinquency rates? They're going to shoot up. The entire financial system, unfortunately, in the Western society, actually all around the world, but it's more, I'd say the US and Europe and a lot of Asia is very financialized. The economy's it runs on credit, which is unfortunate. By the way, in the newsroom, I posted a video. It was really good, and it talks about how the Fed could go bust and who owns it. And it should make you very, very angry. There's some serious truths. I don't know how true it is, but some serious truths in the video. You shouldn't miss that one. It's in the newsroom. Links below the video below. All right, so loan delinquencies are going to catch up. Now, today, the PPP loan thing was approved for 5 more weeks to buy more time, and then they're going to approve a second stimulus package. And what they're doing is reliquefying the market and the economy so loan delinquencies don't start happening. They're going to happen anyways. It's mainly going to happen not so much for corporations and whatnot, because they get all the free money, right? They get the bailouts. Us, the middle class and anything below her, do not get the bailouts. They're gonna send out stimulus checks again. That'll help, but in the long run, going into 2021, 2022, loan defaults are gonna be rampant. I mean, mortgage-backed securities, like 2008, but this time it's even bigger because we're going to see commercial real estate, commercial MBS loans going bad as well. Not just, and then for the regular people, we're going to see auto defaults and mortgages as well at some point, because so many people lost their jobs, and a lot of them just, they might come back for a few more months, this and that. But in the long run, by the end of 2021, I believe we're going to have this many unemployed, like, permanently, if not more. And to restart the economy and rejuice it, I mean, the Fed's going to have to do another... It's going to go past... Their balance sheet's going to go past 10 trill. It's going to go to, like, 20 trill by the end of 2021. And matter of fact, I think they're going to do it because right now the central bank they're bailing out not just the US, but the rest of the world, and emerging markets who took out all those dollar loans are still going to be in demand for more dollars to try to keep making payments. I mean, it's either every central bank just keeps doing QE for years on end to keep the music playing. Well, they're gonna do that. Actually, they have no choice. The other alternative is the greatest global depression ever. So what they're gonna do is just keep printing. And I'm telling you guys, that's why just holding gold and silver mining stocks and the physical, you can't go wrong, because there's no way out. There's no other alternative. And your window of opportunity is closing again. 20% off. It's $180, and then $10 a month for the private group. Go to my website. Links below this video for you have to use the 20% discount link, and when you check out, click apply code, and then you'll get 20% off. All right, so I mean, they're really stuck printing. I think, and not just that, Q2 earnings are coming, and it's going to be bad. I don't think the market will be able to ignore it. So equity values doubled since 2012, and then this orange line is corporate profits are stagnant. They've been stagnant this entire time while equities have been rising. And that's because of low interest rates, fractional reserve lending, and now it's QE for this huge rebound. It's all QE. But look, corporate profits are crashing now. And I told you guys this was going to happen, right? So this next quarterly earnings is going to be bad. I think the one after is going to be bad as well. But this one is going to be really bad because in March, April, May, everything was shut down. And this is going to be global, pretty much. So, what else? The trade deficit. It's actually, this past week, the econ data that came out on the calendar, the trade deficit for the U.S. actually got worse, which is also really bad. Meanwhile, they're saying a bunch of manufacturing jobs were created. They weren't created. It was just some people going back to work. So what I'm trying to say is all of this put together, it's coming to the forefront like right now before Q2 earnings. And there's no way that the S&P can make a new all-time high. It shouldn't. Unless the Fed steps in early and just announces, I don't know, just more and more and more QE. But this cannot be ignored. Not even by Wall Street. Yeah, here's a PP extension. U.S. Equities and Economic Surprise Index. So, citing a Bank of America report, we noted how the economy is facing fiscal cliffs, which could cause recovery to disintegrate with 4 particular areas of focus. 1, expiration of extended unemployment insurance. Well, he just took care of that. He just extended the PPP thing for 5 more weeks. And then they're going to do another stimulus package. The fading support from stimulus checks, that's going to come in 5 weeks. I mean, the economy is literally on life support. And that has to get passed. Here's the thing. The stimulus package might not get passed because we have an election season coming up. And I wouldn't be surprised that it doesn't. And if it doesn't, then the market's definitely going to fall. And people are going to start struggling. Like, the civil unrest we've seen so far is nothing compared to what happens when the unemployment checks stop coming. Stress from state and local aid. I think all of this is really going to come to forefront in 2021. All right. But for this year, they're going to pass everything, juice the markets, more stimulus, more aid. And then I think Orange Man will probably get reelected because, I mean, that speech was good and he gives you comfort. I mean, the other alternative is it's going to be very bad. All right. Any way you look at it. And I really hope there's enough Americans, which I think there are, who don't want the alternative, because the alternative is going to be very, very bad, even for the markets and everyone. And I think people are smart enough to know that. I really hope so. It's still not in the bag. Like, what I'm trying to say is it's still not certain that he will win. But I mean, when the debates come up, it should be entertaining. And I think he's going to dominate on that. And now that we had all of this, civil unrest and everything, that scared the majority of the population. And he's going to capitalize on it, especially during the debates. And, I think we'll get 4 more years, which is good. Because it's good for mining stocks, because he deregulates. And trust me, if the left wins, they're not going to just put on more regulations. They're probably going to hike taxes, and then they might nationalize stuff. And at that point, it's like, it becomes very hard to navigate the markets, because everything just could be collapsing all over the place. You don't want that. You don't want the left to get in power. Trust me. Super tanker rates collapse. I think oil, like I said, I bought a bunch of calls for 3rd and 4th quarter right at the bottom when oil was like negative. Well, the tankers, the demand's gone for the tankers. Prices are going to go up for oil and energy. your utility bills and everything. What else? This is probably interesting if you're in the US. The complete guide to best and worst run cities. What else is going on? I don't want to talk about certain things. This is funny. So the boomers are selling their stocks to millennials who are on Robinhood. And this was kind of what was happening during the dot-com bubble. So I actually went and I bought a used truck because I don't want to spend money, opportunity cost, but I need it because I just constantly need to haul stuff, or not haul, but I just need a bed. Anyways, and I'm talking to the sales girl, and she's on Robinhood, and she's talking about trading. No idea what's going on. Complete millennial, 25 years old. It's hilarious, and these millennials are gonna get wrecked. I wish more of them would find me, but you know, my channels are pretty much chateau banned, right? So that's why I'm not growing. The only way I do grow is if you guys share my videos. It's the only way I'll make more videos. I don't see the point of even making videos anymore at this point. Yeah, I mean, just another you know, sign of another correction coming. Although I'm going to talk about that. I don't think a huge correction's coming. I think we're just going to get a pullback, then higher, and then in 2021 we'll see, you know, another big one. Yeah, average American's utility is about to rise 30%. And I told you guys. And then there's some energy stocks that I'm bullish on. What else? Okay, that's pretty much it for the news front. Let's look at some charts real quick. Alright, so I went short with inverse ETFs on the market to short the broader market and a few individual ones. And they were working out at the beginning of last week, but now they're significantly down. By the way, do not trade options if you don't have like 7+ years experience. Your brokerage account should be at least worth over 50,000 to be dicking around with the options, because they're strategies. My strategy is I always put on small positions and I spread them out to give me, so I'll put on, like, let's say 5 calls. 2 to 3 of them might not work out. They'll literally go to 0. I lose all my money on 3 of them, but then 2 of them do work out, because timing with options is not easy. And to do that, it takes money, okay? And you have to have a risk appetite, and it's normal for having 50-60% drawdowns on any option trade. That's normal. I'm mainly talking to the private members. All right, anyways, first of all, consult your licensed financial advisor. I'm not a licensed financial advisor. I could be completely wrong. I'm not always right. That's impossible. And you have to make your own decisions. Trading, investing, all of it. Anything I talk about, extremely volatile, extremely risky. Do not invest in anything you're not willing to lose or lose sleep over. All right. So I'll get back to when the market's gonna pull back here. What's interesting here, if you look at the dollar, it's still weak. I told you guys, if this thing doesn't bounce off the 200-week moving average in a very strong way, then the dollar is weak versus other fiat currencies. It's always weak versus real things in the world. Will we get more deflation, possibly, with loan delinquencies? It's a lot of moving parts, and you have to understand that there's a lot of intervention, and this is why you kind of have to take this day by day. But for now, on the weekly here, the dollar is not looking that strong. I mean, it's still strong. It's still at 97. weak is anywhere down by the 80. Still strong, but what I'm trying to say is it didn't bounce off the 200 week moving average and rebound to retest the top range, at least the 99 or 100, right? So that didn't work. Hold on. So if it breaks below that 200 week moving average, then we should see a nice draw to the 94 handle, and that would actually shoot gold higher, like kind of like a $100 move in a week or more. By the way, gold is at all-time highs in every foreign currency in the world, except for the dollar, because the dollar is still king because it's the world reserve, right? So we already had like this inverse head and shoulder, and it shot up, then it pulled back, and now it's in this range, right? This is a monthly chart. By the way, it could actually, the monthly chart would act as support, actually down by the 91.6 handle, not the 94. But there is some support at 94 as well. Let's go back to the weekly chart. Chart earlier was the weekly. Yeah, so it's in this range, it's range bound. If it continues to fall and retest the 200 week moving average, very positive for metals, right? And I think it's going to do it if we get a market pullback and then we do more stimulus the rest of this year. And I'm telling you guys, we could see 10 trill by the end of this year. And if we see, if the balance sheet grows to 10 trillion, I think the DXY, the USD will fall below the 200 week moving average. All right. So here's the euro versus dollar. Maybe a little more upside to test the top of this range up here at the 1.15. This is the euro versus the USD. And then the euro will weaken again, possibly. Probably because they're going to have more financial problems. Believe it or not, Europe's stimulating more than the US because they're not as many countries and entities, corporations, and institutions globally use the euro as they do the dollar. So when the euro, the ECB prints like 500 billion, that's like equivalent of the Fed doing like, I don't know, 3 trillion or something. Just so you guys know. Because there isn't as much liquidity demand for it. So you actually see instant inflation or more of it quickly. All right, here's the S&P 500 weekly. I mean, the heat map was super rad. It did drop for the last 2 weeks. It was very volatile, but now it's trading back up. But look, I mean, oscillators are all overextended, and we have moving averages that are going to cross each other to the downside. Let's take it to the daily. Here's the daily. I will admit, this is a bull flag right here. That's a bull flag. And I like bull flags. They tend to break out like they did in gold this past week, right? And S&P does have it. So technically, you know, breakout. But we're getting very close to Q2 earnings, and everything is very overextended. And honestly, I'm not looking at the S&P. I'm looking at the NASDAQ and the FANG index, okay? Also, I mean, yeah, the daily oscillators could give it a little... That's what... So I'm thinking maybe Monday and Tuesday market trades a little higher, and then it finally sells off. But the reason I'm still bearish is, I mean, besides the fact, I mean, look at this move. This is insane. This is unsustainable. And yes, I know they keep printing, but right now the balance sheet of the Fed's actually dropping. They're pulling back a little bit on the repos and everything. You need a pullback. You just do. And it's on a 3 count. And usually the 4 and the 5 count, and this is a weekly chart of the FANG index on the left. This is the NASDAQ on the right. These are the two that made all-time highs. So whenever these pull back, they're going to pull the entire market back with it. And I've talked about how that's how they really pump the market with the FANGs, right? The FANG stocks and the FANG index. The 4 and the 5 count tend to be weak, and you get a lot of volatility and a pullback. And I'm thinking in the next 2 weeks we're going to see that. Besides that, super overextended on the weekly, super overextended on the weekly and the NASDAQ. It needs a pullback. Correction would be really nice for my short positions. I actually added more shorts Thursday before the market closed, because Friday the markets were closed for the 4th. Another retest of at least the 52-week moving average or the 100-day or the 100-week moving average would be normal. That would be normal. But I'll even take if it could just, the market could pull back to like 9,500 on the NASDAQ. That would also be very normal before it goes higher, okay? Because it has to do that, because it loses momentum and velocity. Because eventually you're going to run out of buyers, okay? Another reason I feel that that's going to happen is it's because of this price action. See this right here? This drop? There was air below it. And then it dropped again. It's not a broadening top, but what it is it's sort of showing you that we're running out of buyers here. And the drop was very quick. What that means is there's a lot of air right around here. And the next time the market drops, it could just drop very quickly, because there's just no support underneath down here. There might be some support at 9,300 on the NASDAQ, but there's a lot of air pockets. And there's also, so let me blow this up for the NASDAQ. You need a retest before you could keep going higher and higher. You need to retest prior resistance, right? At least a retest of 8,800 on NASDAQ would be very normal. Let's just say 9,000, okay? Because I know the Fed's in there and they freak out every time the market drops like 3%, which is ridiculous. Like, oh my god, 1,000-point drop. That's nothing compared to how high and how bubbly this market is. I mean, the NASDAQ's gone up, made new all-time record highs, went up to 10,300 during record unemployment and unbelievable. What's happening is unbelievable. But the market still needs to retest prior resistance areas it's broken through, all right? It just has to do that. If it doesn't, it keeps going higher, it's definitely going to crash back to it real quickly, because then it just creates a giant air pocket. So that would be normal. And not just that, I mean, the bullishness of all the noobs and Davey Day Trader and everyone, it's just screaming for a contrarian we need a pullback or correction. This would be absolutely healthy and normal to at least retest 100 and the 200-day moving averages. So you could anticipate they would be moving up like this, and then they would come close to crossing. The price revisits, hits them, and then bounces off and goes straight up and higher. And that's actually better for the bulls long term if this would happen. Because if it didn't do that, and it just kept going straight up, what'll happen is you'll get like a super blow off top sooner than later. It just could do this and then just crash straight back down and wreck a lot of people. So this, in getting it back up from a crash like that is even harder. So this is what needs and should happen and what I'm anticipating. Alright guys, smash some likes, share my videos, go to my website. Listen, oh yeah, I haven't even talked about gold. I'm still bullish. Like, I'm still holding here. It's just testing the 1800 and it keeps bumping up to it. I think it's going to test it this coming week and will eventually break higher. If I take it to a monthly, you can see right here. Let me draw it. I mean, you can see it, right? Let me zoom in. This looks like a giant inverse head and shoulder, or you could just make a giant cup and handle here. Now, can we still get one more pullback down to like 1690? Yeah, but I'm thinking there's just too much central bank printing all around the world, and we're coming up on an election. More stimulus, more aid. There's no sellers, there's only buyers at this point. I think the rest of the summer going into fall, we've got at least 2 to 4 more months of upside. And the mining stocks, yeah, they've been outperforming everything, but it's still early. But that window's closing. I mean, this prior week they've gone up massively. I don't know what to tell you if you're not holding any. I mean, it's the largest wealth transfer. You want to get in early because, I mean, early was 2 years ago. It's still early now, but you want to accumulate as many shares as possible to really get that bulk of the wealth transfer to, you know, possibly change your life. Can't make any promises, right? I could be completely wrong. All right, guys. Leave anything in the comment section. I do eventually comment within a couple days. I'm gonna make a video Monday. Happy holidays, 4th. Have a great weekend, everyone.